JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 18th of February 2022. So yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So where is it? The content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So yep, check us out here on jfdbank.com, and yep, click on the research tab right there on the top. So now then, jumping into the charts, so let's have a look what's happening with Nikkei and how this week has ended for the Japanese index. So yeah, we managed to rebound from this upside line. Initially kind of had a little bit of a break here, but then yep, quickly the bulls picked up on this and pushed the index back up, and most importantly, it pushed the index back above this hurdle, the one that I kept on talking about, this 26,955 level. To be honest, I think looking at this all here, I mean, I think it's time to adjust the level a little bit for next week. So we'll get rid of this. I'm no longer going to look at this. The lowest point of August of last year, but instead I'm going to recycle this line, and I'm going to pick up on this one right here, this 26,765 territory, because probably this will reflect the picture a little bit better if we get some sort of a breakout here. So for the downside, I would probably look at this one right now, because let's put it this way, we violated that previous level a few times, but kind of really didn't do much in relation to it. We broke this upside line as well. So in other words, if you're looking for some downside on this one, then well, wait for a break at least below this 26,764-65 zone, roughly around here, and then yes, we could go for that maybe lowest point of January near the 26,057 level, and then of course we'll take it from there. For the upside, I would say this way, I mean, given that we managed to rebound from this upside line, then yes, of course that gives a bit more reassurance here for the bulls. However, for the bulls, it's a little bit of a tricky game here, because, well, I would personally, I would like to see maybe a push above this barrier here, this 27,594. But again, let's see how this is going to play out. We're currently sitting. Yes, we're sitting above this tentative upside support line, but overall we are below these EMAs, and in a way we could still roll over here, but yeah, keep that in mind. But suddenly if we pop above the 27,594 territory, now that's where it could become a little bit more interesting for a few more buyers. Now jumping into Shanghai Composite very quickly. So yeah, this one is looking a little bit more promising, I would say, and yeah, boom, there we go, a nice beautiful push to the upside. We managed to break the downside line here, managed to stay above that 21-day EMA, and in a way, everything's looking quite nice here for next week. Of course, subject to how we are going to play out today in Europe and in the US. So one thing, of course, you can keep an eye, of course, on this 21-day EMA. If we continue to trade above it, then yep, I'll aim for slightly higher levels. But don't forget that we have this downside line taken from the high of the Sorry about that, taken from the high of the 13th of December. So in other words, we could see a push higher, but still, if this downside line provides good resistance, then all this move here could be seen just as a temporary correction before another possible leg of selling. So in other words, something like this. For now, we can also draw a steep upside line right here, taken from the low, the 28th of January, which so far is playing out nicely, I would say. Another thing we can do here is we can get rid of this downside line and now focus on something like what looks like a possible ascending triangle. But will that be the case? We'll just have to wait and see, because still we would need to see a pop above that 3,500 level, excuse me. German index, DAX. So, good, interesting performance yesterday. It did initially try to make its way higher, but failed to do so and started selling off. I mean, together with the U.S., U.S. equities. So, yeah, I mean, it's not really very, let's say, looking quite promising. The only thing is, I would say, don't, press that panic button yet, because, for example, the cash index right now is jumping back up. Like it's currently sitting at around 15,283 zone, which, yeah, I mean, okay, so we're somewhere basically around this, around here. Well, and actually not far from where we closed yesterday. So it's not really that, let's say, radical here. It's not really that kind of difficult, or not difficult, but I would say the tragic, that's the word, probably better. For now, guys, as I mentioned before, I'm still looking at this to be as a possible range. However, if we start breaking the lower side of the range, this is where the confirmation for a double top would come in as well. We would also maybe, it would be a neckline for this double top, and the double top neckline here would be broken. Also, the head and shoulders pattern neckline here would be broken. So, in other words, a lot could come on a breakout of this lower side of the range. So for now, we're just observing this one, just watching what's going to happen next. But yeah, at the moment, as long as it stays somewhere around here in this area, above the lower side of the range, but below this downside resistance line taken from the high of the 2nd of February, I will remain on the neutral side. Now jumping into Nasdaq 100. So beautiful retracement here. Look at this. I mean, beautiful move to the downside. We came close to testing the lower side of the falling channel, which is quite okay and quite normal. The cash index is currently sitting at around 14,261 zone, and in general, yesterday the Nasdaq was hit the most. I mean, technology stocks, technology sector was the most hit sector. I mean, followed by communication services, and then consumer cyclicals, the best performing in all this. Still, there was a sector which performed quite well, and surprise in there, consumer defensive. So yeah, let's see, yeah, how this is gonna all this is gonna play out here. For now, I mean, yeah, it's a tricky one. Oh, and by the way, if you're wondering, consumer defensive, that's Walmart, Costco, your Procter and Gamble, the Kraft Heinz. So yeah, basically those guys have performed quite well. Of course, higher inflation, it's kind of helping their produce. I mean, still they're collecting revenues, but this, of course, could be a bit of a temporary occurrence as the consumer starts to adjust to the higher inflation. So they are suddenly, I would say that the variety of the consumer basket might, your daily shopping kind of basket could lose its variety, and different products, because just people will start saving a little bit more. So consumer defensive stocks did enjoy the moment. However, like I said, will this be a longer term occurrence? I don't know. It will be quite an interesting thing to see, but because, like I said, if inflation continues to continues to bother the economies, which most likely it will, then, like I said, consumers might just cut down on certain, on certain goods. They might sacrifice certain goods from their weekly shopping basket. However, let's see how this is going to play out. Let's not try to play Nostradamus too much. So yeah, let's see how all this is going to play out. But coming back to the technical picture here, for now, I would say I'm keeping an eye on the lower side of this range. Range. This falling channel. I want to see if we rebound from here, because but let's say even if we drift a little bit lower, we do have this key area of support, which is kind of roughly near that 14,000 mark, I would say. So I have this one highlighted slightly below it. But keep your eyes initially, of course, on that psychological 14,000 mark. That's going to be quite interesting. Yesterday we overcame that lowest point of October, which was roughly near that 14,385 level. We overcame that. We dropped below it. We stayed below it. Now the next question is, can we hold on to that 14,000 mark? Well, again, the only thing we can do here right now is wait and see. If you do try to take advantage of all this, I mean, maybe some sort of a slide here, then of course have your stop loss in place, because as I said, we're still within this falling channel pattern, so maybe a bit of a rebound here could be possible as well. S&P 500. So this one's looking a little bit more bearish than bullish, and yep, there we go. We had a breakout and we stayed below that 4,414 level. We stayed below that 200-day EMA. So everything's kind of now pointing towards the downside. However, the cash index right now is also rebounding somewhat. We're seeing it trading near the 4,400 zone. So yeah, we had a bit of a rebound here. However, we're still below that 200-day EMA. And what I'll say here is that as long as we stay below that 200-day EMA, yes, I will continue aiming to the downside slightly here, not radically to the downside, but slightly to the downside. And one thing that you can keep an eye on for, let's say, today is this 4,365 level right here, marked by the I think, is that the current lowest point? Yep, that's the current lowest point of February. Now, and if we do drop below that area, then yes, this is where it could become a little bit more interesting for a few more sellers. Now, jumping into another index, and this is a dollar index here, and yeah, to be honest, as I mentioned yesterday, I'm still kind of observing this one, but as long as it's going to stay in here in this territory, I'm going to remain slightly on the kind of neutral side, because I don't really like when it starts oscillating around an EMA, for example. Then here we have the 21-day EMA, and it's currently oscillating around it, so that's not my favorite scenario here, so that's why I would prefer to wait maybe for at least a push somewhere above this area. Above this 96.30 zone in order to aim for some higher levels. For the downside, I would need to see a drop somewhere below this 95.14 territory right here, marked by the current lowest point of February. And then, yes, a forthcoming lower low would be confirmed. We would be below all of these upside lines, below the 100-day EMA. So yeah, everything kind of could play out nicely here for the sellers. Jumping into gold very quickly. So gold, I mean, well, talk about the good move, to the upside. And I said to you yesterday that I'm waiting for that pop above the 1877 zone, and of course the whole kind of things surrounding the geopolitical tensions is helping gold a little bit here, bringing up demand here for this commodity. Keep a close eye on it. Yes, we might see maybe a further move to the upside, and just to let you know, this is where we're heading right now. I mean, it seems like that, of course, which is the highest point of June 2021. Yeah. So last year we managed to reach that 1916 zone. So we got a nice test of it. Now let's see if we can reach that again. For now, I don't really like, we already got this move, so I mean, if you manage to capture it from here, great, good job. But now let's say given that we had quite a steep up move here, yes, we are having a nice little retracement here. Again, this is the problem. It's unclear how much will this, be able to retrace. But if we apply our Fibonacci levels here, let me just put this one on the chart. You'll see that the 23.6 is somewhere roughly around this hurdle, around here. So yeah, I mean, I don't think that maybe this is the end here for the upside. Let's say, looking at this picture, I mean, I really like this 1916 zone, because if we would drag, for example, and draw a Fibonacci retracement here, then it kind of plays out nicely with some of the levels here, some of the levels that I looked at previously. So, but we'll get to that point a little bit later. For now, I'm watching, let me just get rid of this. For now, I'm watching this this area here, this 1877. As long as we stay above it, then yep, we might see another push to the upside. Yep, and you can see in the chat room here, good morning to Evu, good morning to everybody else as well who's joining in. So I hope everybody's having a wonderful start of Friday. So yeah, jumping into oil. Now let's have a look at what's happening here. Now this is a bit of a mess, I would say. So if you remember, I talked about this this week, and I said that, well, let's wait and see, and let's see if this is going to actually play out nicely or not. And what I was talking about is maybe a potential kind of head and shoulders pattern here, with the neckline being roughly around that 88.82 zone. Well, so far I'm looking at how this is all performing. I'm kind of gonna stick to that level, stick to that idea for now. What I'm looking at right now, let's say for today, if we drop somewhere below this 90.69 zone, then yes, I'll slowly aim to the downside. Of course, I'll have my stop loss in place, just because, to be honest, I have to admit, I mean, on oil, I mean, it does, for example, go and break the certain level that I'm talking about, and it goes like after that in that direction. But by the end of the day, it kind of, decides to do something else and just, messes up the whole kind of scenario. Initially it works out, but then it kind of doesn't, initially partially starts working out, but then it just kind of, does what it normally does. I mean, it just kind of messes up the whole chart. So that's why for now, I will, like I said, on this one, it's probably easier just to try to capture like a momentum, an impulse, and then kind of take profit on it if you can. Don't kind of overhold oil, because it's quite volatile, and it can easily kind of go in the opposite direction very quickly. So unless of course your bank account allows, or your trading account allows you to hold on, and allow you bigger swings on this one. However, anyway, looking at this for now, guys, like I said, that's the scenario I'm aiming for. I mean, I want to see maybe a drop below this 90.69 level in order to go for the downside slightly towards that 21-day EMA, and then I'll just take it from there. For the upside, I would need to see another push above this 93.14 level, somewhere around here, or maybe even, let me just adjust this. I mean, let me pick up on the high of yesterday, just to be a little bit more on the safe side. This 93.34 level, and if we do climb above it, then yep, we could maybe go for a further upside here. So yeah, that's the case. Let's see if this is gonna play out as I said or not. Sawi, yep, good morning to you too. Yep, I also hope you're having a wonderful start of Friday. Now, jumping into Ripple. So from kind of the top cryptos, Ripple is the one right now that is rebounding and trying, to show some signs of life. It's reversing nicely from that 21-day EMA, so that's a good sign. However, of course, we would prefer, to get very comfortable on this one. I would prefer to see a push above this 0.9170 territory right here, which is currently the highest point of February. For now, my only issue here is that, let's say, looking at this, if we consider this to be as a potential pennant, a bullish pennant, Okay, so that maybe, you know, that could support the upside scenario. However, if we're looking at this from just a descending triangle pattern perspective, then maybe some downside, you know, could still be possible. And let's put it this way: if it drops somewhere below this area, below this 0.7468 zone, somewhere around here, then yeah, I think around 0.74. Yeah, 68, roughly around here. If it drops somewhere below this, then, well, that's where it could become quite interesting for a few more sellers, guys. For now, I'm just observing this one. This is quite a tricky one, but quite an interesting one at the same time. Jumping into a few pairs very quickly, Aud Jpy. I'm gonna fly through a few pairs here because some of them I've picked up already, just to see, you know, I want to see how they're performing. But basically, with Aud Jpy, I said that, you know, we're stuck in between these two tentative trend lines. We are kind of stuck well, on the positive note. We're trading above all of the EMAs. However, that doesn't really maybe at this point it doesn't really mean much. So if you're looking for maybe some, you know, higher levels later on, then a breakthrough one of these trend lines is needed. For now, I'm just, like I said, observing this one. AUD CHF is quite a little bit more on the positive side. One thing that I need to redraw here is, of course, this downside line. We managed to break it. And most importantly, we managed to rebound from it, and it acted as a nice, good trampoline here. So can we go higher? This is going to be a big, good question. For now, I'm leaning towards the upside. I'm leaning towards slightly higher levels, but only towards this downside line for now. So this downside line is taken from the high of the 18th of March. Now, if we need to see, or should I say, if we want to get a little bit more comfortable with the upside, of course, a break of this 0.6675 level is needed. But at the moment, I'm keeping, excuse me, I'm keeping a close eye on this 100-day EMA, which currently is doing its job and providing good resistance. Now, if that gets hurt, if that gets, you know, if that gets broken, well, that's where a few more buyers might join in. So keep that in mind. Quick update on USD Jpy. One thing that I need to do here is remove all the drawings because we need to have a fresh look at this, because this is just I would say annoying a little bit right now. It's not really doing much. So okay, we had a nice hold up here near this 116.35. So that was you know, that I mentioned this previously, but now we're seeing a bit of a drift lower. The only thing is that, let's say if we just look at this as it is right now, then I will say that as long as it stays below that 21-day EMA, then yes, we could maybe see a bit of a drift towards that 100-day EMA here, shown as the green line. The only problem that I have here is the kind of, you know, ongoing geopolitical tensions, which are actually messing up all the charts. So that's why it could be unclear. I mean, let's say, you know, it's currently sitting below the 21-day EMA, but it was also here back in the beginning of February below that 21-day EMA. But look what happened. We reversed and went higher. So that's why I'm not gonna really, like I said, I'm gonna keep an eye on this for now. But let's say if I'm looking for some downside, at least in the near term, I would actually like to see a drop below this 114.79 level right here, which is the current lowest point of today. If we drop below it, then yeah, I'll go for slightly lower levels, like for example this one right here, and then so on and so on. So like I said, I'm trying to, you know, keep it cool here and trying to keep a cool head, and yeah, not to overtrade too much on this one. I don't really like when it's like this, so that's why if I don't like it, I mean, if I'm not comfortable with it, I'm not touching it for now. USD Cad. Now this one's quite interesting. Still, we're, you know, I've talked about this pair this week, and we are basically below the we're below this downside resistance line still, taken from the high of the 20th of December, but we're struggling with this area right here, and I think I need to mark it as an area. So this is roughly between the 1.2636 and 1.2650, and yeah, I mean, if we do clear this area, then we would also drop below all of the EMAs, and potentially more, you know, sellers could join in. But for now, let's be very careful, let's be very cautious, and let's wait. GBP NZD. This one is also quite interesting, and let me just also remove all the drawings and start fresh. Now, what do we have here? Basically, after we managed to reach this high here, in February near the 2.0535 level, we started drifting back down, and we kind of at one point where we dropped to the 2.0223 something level like there, and we also dropped to that 21-day EMA, which did provide good support. Now we saw a rebound, and now what we're getting here is a bit of I would say, a bit of a maybe something like this, depending on how this is going to play out. Let's say if we do reverse from this 21-day EMA back to the upside, then we'll get ourselves maybe a possible triangle pattern here, which which could a little bit help us out here, because at the moment, so basically something like this could be possible. I mean, if it does rebound from here somewhere, then yes, we could get ourselves a nice little squeeze here. However, that's for now, it's a bit too early. I mean, let's see if we do actually rebound from this area, because we might not. So this is very, very tentative. That's why, I mean, I'm just keeping this idea as an idea. What's interesting here for the downside, of course, is the fact that if we drop below this hurdle here, this 2.0223, then yep, that's where more sellers could join in. A quick update on GBP USD. It's the same analysis, guys. I mean, if you watched my videos this week, I mean, I talked about this. So for now, I'm aiming slowly to the upside. We managed to clear this 1.3572 level, so, and we managed to pop above all the EMAs here, so all is kind of good here for the buyers. But now we just need to clear up this area right here, which is roughly around that 1.3628 zone and 1.3644 levels. Euro Aussie, so yep, Euro Aussie is coming closer to this upside line. So let's see what's going to happen here. I mean, are we going to rebound or are we going to break? For now, I'm just, like I said, I'm aiming for this upside line, and if we do break it and stay below this upside line, then yes, I'll go for some lower levels. Euro Cad, very quickly here, same analysis as well. We are forming this nice falling channel here, but at the same time, on a slightly bigger picture, it could be just a nice bullish flag. So, but as I said before, if you're looking for some upside, now I will redraw this level a little bit, and I will probably mark somewhere around here. Let me just double check. There we go. So something around here. So if we get a nice break above this, above this area here, above this 100-day EMA, above this 1.4663 level, then yes, we could maybe go for the upside, because this would confirm a possible bullish flag. EURUSD. Again, not much to talk about here because it's just stuck here. So to be honest, it's not very interesting. So that's why I'm leaving this one for now. I'm picking it up I'm picking up on this one occasionally, but yeah, it's not really quite interesting at the moment. For now, I would say if you do want to squeeze something out of it, maybe in the short run here, then well, keep your eyes on this hurdle. This one, right? This one right here, the 1.1396. A nice pop above it may lead to some slightly higher levels here, but we do have an obstacle, the 100-day EMA, and this barrier right here. So another problem. For the downside, well, I mean, a drop below this 1.1330 might just do the trick for a few more sellers. We could maybe see a drift lower, but yeah, for now, like I said, I'm keeping an eye on these two levels. I want to see what's going to happen after, but still, it wouldn't mean that it could. This could determine the medium-term trend for this pair. So that's why we'll just, like I said, we'll just continue watching these levels, and then we'll just go slowly, step by step. So guys, that's it for this session. I thank you very much for watching and listening. I really appreciate your time, guys. I really do. So if you managed to find something useful in my videos, I'm really happy. Honestly, it's like it means a lot for me. So thank you very much for joining in and watching this till the end. I hope you have a fantastic trading day today. First of all, don't overtrade. It's Friday. If it's not working, for example, there's always Monday. So have a wonderful weekend as well, guys, and I'll see you on Monday. Thank you very much, and bye-bye.